Hey guys, I hope you are doing well, and thanks for tuning in today to another episode of The Mortgage Maze. This is our newest series where we're talking with Stephen Knorr with Alcova Mortgage right here in Charlotte, and we're bringing you a new video every single week specific to a mortgage-related topic. And if we haven't met yet, my name is Brian Taylor, and I'm the owner of Dreamline Realty right here in Charlotte as well. And I'm excited to have you along for the ride today. So in last week's video, we talked about a topic called the 2-1 buy down and how this strategy is helping a lot of people right now get into a house with a lower monthly mortgage payment. So you may want to go back to the channel and check out this video as well. But in today's topic, we are talking about qualifying for a mortgage with student loans. And guys, student loans have been a hot topic over the last few years, especially of recent, as there is legislation that is considering student loan forgiveness because a lot of people, guys, simply are having a hard time making their student loan payments. So let's take a look at some of the recent headlines around this topic and see what's going on out there. So we have one here. It says student loan payments suspended due to coronavirus. So if you remember in March of 2020, when COVID hit, the government put a stop on everybody having to make their student loan payments. That also included interest being frozen. No payments have to be made, and that still is the case today. So let's look at another one. This one here says that almost 4 in 10 cannot afford their student loan payments. And one more goes on to say here that 53% of student loan borrowers say their financial stability relies on debt forgiveness. And finally, here's an interesting one. More younger Americans have been able to buy houses because of the student loan payment pause. So there you go, guys. It is everywhere out there in the news right now. And student loans forever have really kind of been a thorn in the side for a lot of borrowers out there. And today we're going to talk about really 3 specific questions that seem to come up all the time around student loans. And I want to bring in the mortgage master, Mr. Stephen Knorr here with Alcova Mortgage, and have him shed some light on what's going on with the student loan situation when qualifying for a mortgage. So Stephen, are you there? There you are, my friend. How are you today?
I'm well. Thanks for having me, Brian, as always. Looking forward to it.
Yeah, absolutely. I love getting together with you and just picking your brain on all of this stuff mortgage related. It's so awesome. And I'm so excited about this new series here that we're doing on the Mortgage Maze. So, you know, Stephen, I've been doing real estate a long time. I know you've been doing mortgage financing for a long time, and you could probably agree with me that student loans come up all the time. So there's really 3 questions that I can think of that really come up or asked to me that I always have to defer because I don't know exactly the answer every time. So I want to go through these questions and pick your brain on what might be the right answer and help our viewers really kind of understand if they have student loans, like what options they might have. So,
absolutely. I think it's a great idea.
So let's kick this off with the first question. This is the one that comes up a lot. So my student loans are in deferment. Are they still counted as a debt?
Oh, that was a great question. And that's something that comes up a lot. So we talked about this on the last episode. A lot of the people applying for loans right now are renters whose rent is escalating to a point where they can't afford that, maybe a younger crowd. So student loans are on most credit reports. So us as mortgage lenders, when we pull the credit report, the first thing we're going to see is those liabilities and those debts. So that's when we see the student loans. So yes, it's always going to count as a debt, but what we're looking at is the payment associated with that debt, right? So the mortgage approval is mainly based off a debt to income ratio, meaning can you afford your payments and what's the likelihood of you paying them back? So when your loan is in deferment, it's going to show up on the credit report. So we see 3 main things. The student loan is in repayment, it is deferred, or it is in forbearance. So it's either going to show up with 0 payment or the payment that you're paying. So when we analyze that based on the status of whether you're in deferment or forbearance, we can sometimes eliminate that monthly payment. So you still owe the debt, right? That's between you and the government or whoever else. But in our mortgage world, we're focused on, can we get you approved for a mortgage payment so we can get you out of the rental situation that you're in or help you make that transition. what a lot of people think is old ways that have been broadcasted where mortgage companies have to use 1% of the student loan balance no matter what. So if you have $200,000 of student loans, in the old days, I'd have to count a $2,000 payment against you no matter what. That was devastating to getting people approved because that's a huge payment. So in a worst case scenario right now, we can use a 0.5% payment, but there's always a but in the mortgage world, which is a good thing for this one. If you are in a forgiveness plan or a forbearance plan and you can prove to us through paperwork from your loan servicer that that debt is going to be forgiven and you don't have to pay it, we can use 0 for the monthly payment. There's also income-based repayments, which are a new thing. So if you're in an income-based repayment plan and your current student loan payment is subsidized or severely reduced, we can use that lower payment as well to qualify. So with these new exciting changes that are happening, it's really helping us get people approved that carry some student loan debt. So one of the big things I just wanted to get across is, if you have student debt, you're just one of the masses out there, but you can still get approved for a house, no doubt about it. And we'd love to try to help you navigate that, put that puzzle together for you.
Yeah, so it sounds to me like every case is kind of, case by case, And I think the best thing is to just have a conversation to talk about your situation specifically and how that relates to, a potential borrower and kind of what's going on there. Because it seems to be that there's not, I wouldn't say necessarily gray area, but it does seem to be a little different based on everybody's kind of situation, maybe even how tight they are on debt to income ratios. So
yeah, and that's the big thing is prior to 3 or 4 years ago, it was black and white. And gray shouldn't be considered a bad thing because it creates flexibility that sometimes allows us to put that final piece in the puzzle so that we can issue that mortgage approval and make this happen for the potential home buyer.
Yeah, that's awesome. Great information, Stephen. I love it. All right, if you're ready, let's go on to the next question. So here is question number 2 that comes up a lot. What happens if my parents pay my student loans, but they're showing up on my credit report?
Yes, we see this a lot because as a youthful person growing up in the world, their parents, I don't know if you ever experienced that, Brian, but they co-sign. So it shows up on both people's credit. But obviously when you're in college, it's good to work, but obviously there's limited cash flow. So in our mortgage world, if we can prove that the parents make that payment from their account, separate account that the buyer's not on, for at least 12 months, then we can exclude that payment. Also, there's a rule where if the debt is within 10 payments or less of being paid off in full, we can also omit that payment. So again, it will create a little bit more work because we'll have to ask mommy and daddy for some paperwork. But if that means potentially getting them out of the basement or the couch and into their own house, they're usually very much obliged to do so.
Yeah, so you're probably going to need to go back and get 12 months of bank statements from the parents to show it's come out of their account every month. Is that how that kind of works?
In theory, yes, but sometimes it can be much simpler than that. We can get a payment history from that specific account and link it that way. So our job is always to keep it as simple as possible for everybody. So believe it or not, mortgage companies, we don't want all that paperwork. It's just more stuff for us to process and try to keep up with. So on a case-by-case basis, depending on how it happens, we can definitely make it as simple as possible. Talking about that, sometimes what happens is the parents will Venmo the whoever has the student loan and they will pay it from them account. So that wouldn't work. This only works when the parents pay it from their account directly to the loan servicer. That's the key to omit those payments.
Okay, and I'm glad you brought that up because I think there's probably a lot of people out there that think that they can't get a mortgage because of those things still reporting on the credit report and not knowing that there's really a way around it to show that someone else is actually making that payment. So that's pretty awesome. All right, well, good stuff. Let's move on to our third question, and that one is: I got behind on my student loans. How long do I need to be current in order to qualify for a mortgage?
Gotcha. So I always tell people, I am not here to judge. I am here to help as a loan officer. So I've seen the best of the best and the worst of the worst. Your personal situation is what you're dealing with, and we want to get you a house. So when we look at this, we already know what's happened. And a student loan is no different than a car loan or a credit card. So if you get behind on a student loan, just like any other debt, the first and most important thing is, have you caught it back up? So for a student loan specifically, most of these are federal debts. So if you go into default, which means your student loan has essentially become a collection, that's a situation where we'd want to have a separate conversation because that really gets in the weeds. But if you've just missed a few payments, which means you're actively repaying it, you're not deferred or any of that, the first thing you have to do is just catch it up. Once you catch it up, we can then attempt to get you approved for a loan. But just like any time you accidentally miss a payment for whatever the reason is, life, it happens, there's an impact on your credit report. So the bigger picture is, where's your credit score at as a result of possibly getting behind? So again, the good news is we have awesome simulators that can look at credit, analyze credit, help people get from here to there. So the light bulb is, if this is you out there, give us a call. We can probably figure out a solution. And if we can't figure it out today, we can create a plan and get you ready for when the time is right.
Yeah, that's awesome stuff. I appreciate you answering those questions. Real quick, you mentioned a topic there, Stephen, talking about a credit simulator. I know this is kind of off topic, but it just kind of came to my head. So credit simulator. So if someone, even if it's not a student loan, but someone may even have a credit card that got late, are you saying that you can go in and say, hey, if you stay current on this debt for 60 days, this is what your credit score will increase to?
Yeah, man, it is an awesome software. So we can literally go in and manipulate, and I'm using that word in a very positive way, but we can go in and change your credit report and say, what if this never happened? What if the balance is here? What if they added a count and waited 2 months and run a simulation, and it will show us with like 99.999% accuracy what's going to happen to that credit score. So I use the term punt, as in football. When a client comes into our world, we never want to punt the ball. Even if their credit's a little bit too low, we want to give them a plan. And if it's within 30 days, I can fix it within 30 days. I can then use the backdoor channels to the credit bureaus I have and do a rapid rescore and get that client score up right then and there, which is sometimes the difference of getting them approved right now for the house they really found out there they love. If it needs a little bit more work, we partner with companies that really attack, and they're litigators and attorneys that really go to work on the credit report. But it all starts with us. There's no cost to any of this. It's simply taking the loan application, which is secure, takes you about 10 minutes to get through, and just putting the ball in our court. So what we can do best, which is work and serve you and try to get you approved for that loan.
Yeah, that's awesome. Hey guys, if you're getting any value from this video, give the video a like and please subscribe to the channel. I don't want you guys to miss out on any of these videos that we're going to be putting out for you guys every week about a whole series of mortgage topics. Our goal is to help anyone looking for a house to get plugged into the mortgage scene, to understand what's going on, so we can just bring as much value to you as we possibly can. So go ahead and subscribe to that channel. And Stephen, if someone wants to get a hold of you, what's the best way to do that?
Yeah, best way is probably calling 704-453-1716 or www.theknorrgroup.com has all of our information, and we're always here to serve.
Awesome. And I'm going to put a link in the description below right to your calendar if someone wants to schedule 15 minutes just to have a phone call. I'll put that in the link below. That way they can get to you that way as well. So, Stephen, once again, appreciate you coming on. Your knowledge is mind-blowing sometimes. So just appreciate you being on the channel. And guys, thanks for watching. Make sure you stay close to the channel for next week's episode and other videos that I'm putting out about market updates and everything else to help keep you guys informed on what's going on here in the real estate market. So guys, as always, thanks for watching and make it a great day.